Welcome to our second Davidson Realty webinar. Davidson Realty is located in St. Augustine, Florida, and we serve North St. Johns County and Duval County. We're new to this technology, so please have a little patience with us. We learned several things in our first webinar, and I'm sure we'll learn some more today. We're actually located in World Golf Village, and at the end of the slides, we will have our contact information, so you can email us or call us. Or if you're in the St. Augustine area, please just stop in and see us. My name is Sherry Davidson. I'll be hosting your webinar this morning with two others that I'll be introducing. I'm the president of Davidson Realty. I'm a certified distressed property expert. We've been doing business here in St. Johns County for 20 years. The next person who will be speaking this morning is an agent here at Davidson Realty. Her name is Suzy Evans, and she is also a certified distressed property expert, and she has helped many homeowners who are struggling with their payments, and you will hear some stories from Suzy. We also have Damien Blumstein, who is a mortgage professional with 15 years experience in the mortgage industry. So I will start this morning by turning the microphone over to Suzy.
Good morning. Thank you, Sherry. My name is Suzy Evans, and I'm an agent here at Davidson Realty. And a bit about myself, I've been a licensed agent in Florida since 1992. I have over 10 years experience in the mortgage industry on the financing side of real estate, filling the roles from loan processing all the way to Vice President of Lending Operations. As Sherry mentioned, I am a certified distressed property expert, and I've been a resident of North Florida for over 26 years. So I've seen a great amount of growth in our area and have recently witnessed a great change in our market. I think it's fair to say that we've all been affected by our market conditions, and if you're one of the lucky few who have not been affected, I can almost guarantee that you know somebody who has. With the great changes in our market and economic conditions, there are many homeowners who are falling behind on their mortgage payments. And I'm asked by homeowners, what should I do? If you are struggling to make your mortgage payment, you might have missed a month, 2, 3. You might have even been served a lis pendus. The worst thing to do is to ignore it and do nothing. I advise a homeowner to sit down and write out a budget. Write out what your expenses are. What are you spending each month? I think each of us can probably find ways to cut our expenses and generate a bit more income to maybe cover our necessities like a mortgage payment. In your expenses, we all have things that are necessary, and we have items that are discretionary. Discretionary items we can cut back on. It might not be going out to dinner 3 nights a week, maybe just once a week. We all might have a satellite provider, DirecTV. We know that the premium package might be $90 and is great to watch HBO and all those premium channels, but cutting it back to a basic satellite to $19.99 might save you some money. You might have a gas guzzler. It's costing you an arm and a leg to fill up your gas tank and drive to work every day. Maybe switching to an energy efficient car would save money there as well. The next thing I would advise is to communicate with your lender, whatever your situation might be. If it's a loss of a job, reduction in pay, maybe you have mounting medical bills, whatever your situation is, open the line of communication with your lender and tell them what your situation is. They are going to be the best to discuss what your options are. What we found out is that there are 9 options to foreclosure. I'll tell you what they are, and we can go into more detail. There are 9 options, like I was saying: sell your property, rent your property, mortgage modification, refinance, forbearance, reinstatement, bankruptcy, deed in lieu, and short sale. The first option is pretty self-explanatory. If you can sell your property, if you have enough equity to sell your property and get out from that large mortgage payment, this would be the first option. Second option would be to rent your property. If you can rent your property for more than your mortgage payment, this could be a viable option for you as well. The one thing to keep in mind is that in many cases, the rent will not cover the full expenses of owning the property. Keep in mind that you have property insurance, property taxes, there might be homeowners association dues, upkeep, and things of that nature. Our next items, I'm going to turn it over to Damien Blumstein to highlight with you.
Hello, everyone. This is Damien Blumstein. I'm a mortgage professional here in the Jacksonville market, been born and raised, and I have done mortgage modifications for folks, and I am a mortgage broker doing refinances as well. Mortgage modification and refinancing are great, viable options to staying in your home. When considering a mortgage modification or any of the 9 options, as Suzy had stated, the first option or the first step is to create a budget. It's important to sit down with your family and evaluate what your monthly expenditures are, because this is what your lender is going to do in determining what options they will give you. So it's important to get your mortgage statements out, and I'll go through a list here of items that you would want to put together, but keep in mind that most lenders are going to shoot for a break-even situation, whereas you add up your personal expenses every month plus your new mortgage modification payment, and hopefully you break even or you have a positive cash flow of about $100 to $500. Every lender's guidelines are different, but generally speaking, across the board, what most of the lenders look for is that you break even as a result of a mortgage modification or refinance. So some of the items that you want to include in your monthly budget before you make a phone call to your lender are, of course, your mortgage payment. If you have a first mortgage or a second mortgage, home equity lines, your property taxes, homeowners insurance, homeowners association fees, or condo fees. Personal expenses that you may overlook but you need to include would include electricity, your gas, oil, water, sewer, all your utilities, trash. Household expenses would include things like groceries, dry cleaning, toiletries, school tuition, child care, auto loan, auto insurance, gas, car maintenance, monthly parking, if you have another vehicle, your phone expenses, home phone, cell phone, cable, satellite, health insurance, doctor, medical, drugs, personal loans, secured debt, unsecured debt, and then of course you have to include your minimum credit card payments. So before you make a call to your lender, it's important to get all of these items and put them on paper and add them up. Add up your current situation with your current mortgage payment. And then the goal, once again, is to break even or just have a small cash flow by the result of a mortgage modification. But it's very important to get these items together before you make the phone call, because many times you will sit on hold for an hour, maybe 2 hours, and because you are not prepared, they may shoot you down initially. That's not to say that you would not qualify for a mortgage modification later, but it's better to be prepared up front with all of your documents in front of you. Do not ignore this situation because it's not going away. Do your budget ahead of time. Now, one of the results of calling your lender is a mortgage modification, or could be. There are many others. The mortgage modification reduces your monthly loan payment by reducing your interest rate and or combination of reducing your principal balance. The most common that we see right now is just a rate reduction, because the rates are much lower now than most of the mortgages that were originated in the last 5 years. Sometimes lenders will reduce the balance owed if you had a second mortgage, for example. But they will do what they can to get you to that break-even point. You will have to qualify with verifiable income. just like a fully documented mortgage. There is a very useful website that is on this slide right here at the bottom, makinghomeaffordable.gov. It highlights some of the things that I've just discussed as well. It also promotes a free event next Thursday from 2 to 8 at the Veterans Memorial Arena here in Jacksonville. They are organizing an event where lenders will be on hand to meet with customers face-to-face and go through this budget process. So what they're asking is that you bring all of your mortgage statements, all of your bills, and go through this process. You'll be able to meet with someone face-to-face. So if you're interested in learning more about a modification, I would visit this website, do your personal budget before you arrive, and then, of course, go by and talk with one of your lender representatives. First of all, there are other companies out there that are offering foreclosure rescue services. I would caution anyone from doing anything like this. It doesn't cost anything to do a modification. These are things that you can do yourself. It does take diligence and patience and persistence in following up with your lenders and sitting on hold for a while. But all of these things can be accomplished by yourself. If you do need some assistance, I would attend this event next week, for example, or visit your local legal aid office. The Jacksonville area legal aid office offers free services to its residents. That would include St. Johns County as well. It's a great resource. It's just jackslegalaid.org. They have an office in Jacksonville as well as St. Augustine. And there are attorneys that provide these modification services as well as some of the other results of negotiating with the lenders. So the point is to get active and do not ignore any of this and educate yourself as much as possible. And then you can hire an attorney to do all of these things for you as well. But once again, everyone can do these on their own. Let's see the next slide, please. Once again, you have to have verifiable income and to complete your budget. Let's see here. There's another component to the mortgage modification process that lenders will consider, and that is a hardship. You will have to complete a hardship letter to explain your situation as to why the lender should engage consideration of modification. It's very simple, but some of the common reasons that are acceptable with most lenders would include an adjustable rate mortgage that has changed, and now you have a payment shock. Illness, loss of job, reduction in income, failed business, job relocated, death of a spouse or co-borrower, incarceration, divorce, separation, military duty, reduced income, medical bills, or damage to property by natural disaster or unnatural. These are all common causes for hardship, and so one of the things that you will have to consider before you make that phone call to your bank is, what is my hardship? And they will ask you, as well as if you attend this session.